Why the world can't stop borrowing. Let's start with something simple. Imagine a family that keeps using a credit card to pay for everything. Groceries, gas, bills, they keep borrowing more and more. Now imagine that family is a country. That's where we are today. All over the world, countries are borrowing like never before. The US, Japan, China, France, Italy, even Germany, the one that used to be super careful with money. They're all taking on debt. And a lot of it. Why do countries borrow so much? When people think of debt, they often think of something bad, like a person drowning in credit card bills. But government debt is different. Governments borrow for many reasons: to build roads, fund schools, run hospitals, support the economy during tough times, like during COVID, when governments around the world handed out money to keep businesses and families going. In fact, during bad times, borrowing can be a good thing. It keeps the economy alive. But here's the catch. It's supposed to be temporary. You borrow more when times are tough, and then you save or borrow less when things are better. That's not happening. Many governments are always borrowing, no matter the situation. Why is the US at the center of this? The US dollar is the world's most important currency. Countries everywhere trade using dollars. To do that, they hold a lot of US dollars, and they buy US government bonds, which is basically lending money to the US government. These US bonds are considered safe. People think the US will always pay back its debt. That gives the US a special advantage. It can borrow a lot without scaring investors away. This is why the US has run big deficits, spending more than it earns for decades. And it hasn't faced a big crisis yet. Could that change? Yes. Just because something hasn't happened doesn't mean it won't. There's growing worry that one day the US government could hit a wall where investors lose faith, stop buying bonds, or demand much higher interest rates. This is what some people call a bond market heart attack. It's like the financial system suddenly realizing it's been living on borrowed time, and if that happens, things can spiral quickly. Interest rates go up, the cost of borrowing gets higher, inflation might rise too, and then governments are forced to make hard choices, cut spending, raise taxes, or print more money, which usually makes inflation worse. What about Japan? They've had massive debt for years. Japan has had high government debt for a long time, way more than most countries. But they've avoided a crisis. How? Here's what's special about Japan. Most of the debt is owned by Japanese people or companies. The central bank, Bank of Japan, keeps interest rates super low and buys a lot of the debt. The economy has been weak for years, so inflation is low, and people save more. Trust in the government and central bank is high, so Japan can borrow at low rates without scaring its people. But this only works in Japan's unique situation. It's not something every country can copy. What about China? China's debt levels have also shot up. But unlike the US or Japan, China keeps things more controlled. The government plays a bigger role in banks and companies, so it can shuffle money around more easily. The problem is, China's growth is slowing, its population is aging, and it's not clear how long they can keep this model going. So, there's growing concern that China might face its own kind of debt crisis in the future. What's happening in Europe? Europe is a mixed bag. France is having a hard time cutting spending. Politically, it's difficult to make big changes. Italy is one of the biggest borrowers in Europe, but it's been trying to play by the rules lately, because a lot of European Union money depends on good behavior. Germany, the cautious spender, has now changed its tune. It's spending big on defense and infrastructure after years of holding back. Economists have been begging Germany to do this for years to boost growth. Now, it's finally happening. Now, even the most responsible European countries are getting into the borrowing game. So, is debt always a bad thing? Nope. Debt can be useful if it's used wisely. Like if a government borrows to invest in roads, schools, healthcare, or green energy, that can pay off in the long run. But if governments borrow just to hand out tax cuts to the rich or pay for things with no long-term value, that's when debt becomes a problem. Also, if the debt keeps growing faster than the economy, trouble starts to build. Eventually, investors might demand higher interest to lend money or just stop lending altogether. Bond. Vigilantes, you might hear the term bond vigilantes. These are investors who push back when they think governments are being reckless. They sell government bonds, which drives up interest rates and puts pressure on politicians to cut spending or raise taxes. In the past, they were feared, but now many believe central banks, like the Fed or the European Central Bank, can control the bond market. They can buy up debt to keep interest rates low. Some experts even say the vigilantes are dead. Others say they'll come back with a vengeance if inflation keeps rising. Just print money to solve this? Technically, yes. Governments can work with central banks to print more money to pay off debt. But this almost always leads to inflation, sometimes very high inflation. And if people expect inflation, they demand higher interest, which makes the debt problem worse, not better. So, while printing money sounds easy, it's like trying to fix a leak with gasoline. It might work for a minute, but it can blow up in your face later. In short, some people believe we'll slowly inflate our way out of the problem. Others think a major crisis will force governments to change their ways. Either way, we're heading into a future where debt plays an even bigger role, and we all need to understand what's at stake.